So we started 2024 with expectations in changes in the economy, of inflation, of interest rates. However, risk assets still turned out pretty resilient this year. So what should investors look out for the rest of 2024? We're shaking up the format this month, right? We're going to run it in a different way. We'll have 4 questions for Q4. So today we have with us Liu Peiqian, our Asian economist, to help us digest some of the recent changes in Asia, especially in China. Okay, Peiqian, let's get to it. So for the rest of this year, are we expecting smooth sailing, or could we potentially see a bumpier path ahead?
Well, if we look at the rest of the year for the next 3 months, I think it's not all bleak. Even though we're seeing signs of slowdown in the US, especially in the growth momentum, but the Federal Reserve policy pivot has come upon us. The Fed starts its rate cutting cycle, and that will likely to smoothen the pace of slowdown going forward. So recession is not in our base case. We still think that soft landing remains a more likely scenario. If we look at how inflation has been easing and to a much more reasonable trajectory, which is nowhere close to what we've seen in the past few years, and that gives us more confidence to think that the Fed might be going further in the rate cuts. But that being said, I think we still have a few risks that we're watching out for the next few months. US election on top of everyone's mind, I think that's going to introduce a lot of volatility and uncertainty down the road, something we're watching out for closely as well.
So Peiqian, I want to draw everyone's attention to Asia, specifically to China. So what happens in China typically has big implications to Asia as well. So what are your views on recent developments?
Well, I think recent volatility in China's policy has been getting a lot of attention. In fact, we think that's a very significant pivot and to the positive developments, because they are now showing more willingness to support growth, support domestic demand, and to bring the economy up to the stable growth momentum. Looking beyond China, we're looking at a few big structural trends in the region. For example, the demographic dividends that we're going to reap from India, the emergence of AI, energy transition in ASEAN countries that's going to benefit from that is definitely on top of our mind from a longer term perspective. Cyclically, I think the Fed's easing is also creating a more favorable environment for the regional central banks to also start their rate cutting cycle. How are Asian investors positioned for the quarter ahead?
So quite unsurprisingly, we've seen interest into areas that are potential beneficiaries of interest rate cuts. So in fixed income, interest continues to be in investment-grade bonds. In equities, we're also seeing a bit of a rotation out of mega caps that have been very well held for some time. So small mid-cap stocks tend to benefit in a rate cut environment as it helps their bottom lines. Yeah, we're also seeing investors start to pay attention to Asia. We have seen kind of investors start to rotate out of Taiwan, which has benefited a lot from the semiconductor rally. We're seeing more interest flow towards ASEAN, which could potentially benefit from the global and local rate cut cycle. We're also seeing some interest increase in China as strategists and CIOs start to kind of incorporate recent developments in China into their forecasts. So Peiqian, are there any wildcards that we should look out for in the fourth quarter?
Definitely. I think there are 2 big areas that we're watching out for. The first one is on the geopolitical developments. We know the ongoing conflict in the Middle East is perhaps going to introduce some volatility to oil prices, and likewise in the US election, which is going to introduce some uncertainty on the inflation front. And the second part we're looking out for is on the economy. We know that 2 major economies in the world are going through changes right now. It's very uncertain whether or not the US is going to successfully engineer a soft landing going forward. And on the other hand, China is just starting to roll out a set of policy stimulus, and it remains to be seen if that policy package is going to bring the growth momentum to a stabilization going forward.
So those uncertainties you mentioned will create volatility, but there are still opportunities, right? So many parts of the markets tend to do well after the first rate cut. Dividend stocks are one such example, right? So in periods when growth stocks start to do a bit poorer, value dividend stocks tend to outperform. So for example, financials, utilities, healthcare, they tend to do well even going into a recessionary cycle. So that's mainly because many of them tend to be a bit more stable, mature businesses. But that said, that doesn't mean that they are boring businesses. So for example, one ChatGPT search is expected to use more energy, 6 to 10 times more energy than a traditional Google search. So indeed, there are many different pivots and changes happening, right? And opportunities are sure to emerge. With that, thank you very much, Peiqian, for joining us today.
Thank you for having me, Chris.